All right, let's talk about a language that honestly every successful person needs to know. And no, I'm not talking about Mandarin or Python. I'm talking about accounting. But hey, don't worry, this isn't about getting bogged down in some complex math. It's really about learning to speak the language of business. So, here's a question for you. How can you really tell if a business is doing well? I mean, any business, from the coffee shop on your corner to a huge tech giant. Is it just about how many products they sell? Not really. The real story, the truth about its health, is written in a special language. And guess what? Today, we're going to learn how to read it. Okay, so here's the game plan. First, we'll figure out what accounting actually is. Then, we'll see who's using all this financial info. We'll check out a business's report card, learn the three main building blocks, and finally get a handle on the rules of the game. Simple as that. Let's jump in. All right, first up, what is accounting? The easiest way to think about it is this. It's the official language of business. Okay, so here's the textbook definition. Accounting is the process of identifying, measuring, recording, and communicating financial information, and so on. Yeah, I know, that sounds super dry, right? Let's just cut through the jargon. All it really means is that accounting is how a business tells its financial story. That's it. It's storytelling, just with numbers instead of words. So, if it's a story, it must have an audience, right? The question is, who's actually listening? Who uses all this financial information? Well, you've basically got two groups of people. First, you have your internal users. These are the folks on the inside. The managers, the employees. They need all the tiny details, the day-to-day stuff, to actually run the business. Then you've got the external users. These are the outsiders, like banks, investors, or the tax authorities. They're not so interested in the daily drama. They want the big picture summary to see if the business is healthy overall. And if you think about it, each of these external users is trying to answer a totally different question. A bank is asking, if I lend them money, am I going to get it back? The tax authority wants to know, are they paying their fair share? An investor's thinking, should I risk my money on this company? Even a supplier wants to know if they'll get paid. And an employee, well, they just want to know if their job is safe. See? It's the same report, but everyone's reading it for their own reasons. Okay, so how does a business actually tell this story? Well, it all comes down to its report card, which is basically made up of two really important documents. The first one is called the Statement of Financial Position. You might have also heard it called a balance sheet. The best way to think about this one is like a photograph. It's a single snapshot in time that shows you exactly what a company owns and what it owes on one specific day. Just a freeze frame. And if the first report is a photo, then the second one, the statement of profit or loss, is the movie. It's not a single moment. It tells you the story over a whole period of time, like a full year. It shows you all the money coming in, that's the income, and all the money going out, the expenses. And the plot of that movie is actually super simple. A business makes a profit when income exceeds expenses, and a loss when expenses exceed income. It's that straightforward. Did you bring in more than you spent? Great, that's a profit. If not, that's a loss. It tells you if the year was a hit or a total flop. All right, to really understand this language, we need to learn some of the key vocabulary. Let's break down the three most important building blocks of accounting. First up, assets. Now, the official definition is some jargon about a present economic resource, but let's just ignore that for a second. Simply put, an asset is anything the business owns that can make it money down the road. We're talking about things like cash, delivery vans, computers, the building itself, anything of value. Okay, next we have liabilities. And if assets are what you own, liabilities are what you owe. It's that simple. Think of a bank loan that needs to be paid back, or an invoice from a supplier that you haven't paid yet. It's basically a debt, an obligation to someone else. And the third piece of the puzzle is capital. Now, this one can sound a little weird at first. It's what the business technically owes back to its owners. Really, it just represents the owner's stake in the company. It's the value of their investment, the part they actually own outright. So these three concepts, assets, liabilities, and capital, all come together in the single most important equation in all of accounting, and it is assets equals liabilities plus capital. This little formula is so powerful because it tells you exactly where the money to buy all the company's stuff, its assets, came from. Did it come from debt, the liabilities, or did it come from the owners, the capital? This equation has to balance, always. It's like a law of physics for business. All right, so we've got the vocabulary down. The last thing we need is the grammar. Just like any language, accounting needs rules so that everybody is on the same page.
And the number one rule, the big one, is basically be honest. The information has to faithfully represent what actually happened. That means it's got to be complete, totally neutral, and free from mistakes. You can't just cook the books. The story you tell with the numbers has to be the true story.
And to make sure that story is clear, there are a few other key principles. For example, the separate entity rule just means the business is its own thing. The owner's personal bank account is not the company's bank account. Consistency is all about doing things the same way year after year, so you can actually compare apples to apples. And prudence, well, that's just a fancy word for being cautious. It means you don't overpromise. Don't say you've made a profit until you actually have. So what's the point of all these rules? Why do we have things like the IFRS standards? It's all about creating one universal language for business everywhere in the world, so that an investor in Tokyo can look at a company in São Paulo and understand its story just as clearly as a local. It's what makes our global economy even possible. And there you have it. You now know the basics of the language of business, the vocabulary, the grammar, the whole deal. You understand what assets and liabilities are, what profit and loss really mean. So the next time you think about a company, maybe it's your own bank or a brand you love, ask yourself, what story are their numbers really telling me? Because now you've got the tools to start reading it for yourself.